Welcome to the Daily Brief, where I'll go over the highlights in the market for Tuesday, November 8th, and then see how things look for Wednesday, November 9th. And right off the bat, I want to apologize. I have been struck with something, and you'll probably hear some noise in the background as well. Uh, Either the flu or some kind of inner ear problem that has made me not able to look at a screen or prepare any videos. This all started Sunday morning. I woke up very dizzy and have pretty much been horizontal ever since. And so this is the first time that I've been able to prepare a video. I was not able to do the weekly video or the intermarket analysis video, nor was I able to do a daily video for Tuesday. And this is probably all I'm going to be able to do for Wednesday. So even though I post these on YouTube, they're free of charge. I'm trying to build my channel. It's a real small channel. I still take what I do very seriously. And some of you have come to really rely on the analysis and commentary that I provide. And there's really no way for me to communicate to you if I'm not able to do a video. I could post it somewhere, but I'm never assured if people are going to see that or not. So I'll just stick with it. I'm still watching things. I'll post what I can when I can. And thank you in advance for your understanding and patience. All right, let's go back and talk about what's going on right now. On Tuesday, it's been pretty slow, and we've had below average days. That's a large part due to the midterm election. And the market actually kind of likes that, and I'll talk about that here in just a minute. But right at the open on Tuesday, we had a flat open. Buying pushed prices up above R1 at 38.26, and then we actually got above R2 at 38.44. Those were pretty easy levels for the market to get to because Monday's session was pretty much sideways on below average volume. That was another reason I didn't do a video, but usually I do a daily brief anyway, but I just wasn't up to it. As the day went on, selling then took prices down. We saw a pretty big sell come into the program, or program selling, I should say. And I'm going to jumble my words. Please forgive me for that. It took prices down to the unchanged level and went negative. And then we finally found support at the daily pivot at 37.95. Some of that was due to problems in the cryptocurrency markets. And then as we were falling, there's also some concerns about margin calls. You've got a lot of leverage out there. You've got a lot of people who pretty much position themselves to buy low and sell high. And when we start going down, that triggers sometimes a margin call, and that can lead to even more selling. And then there's been some problems throughout the cryptocurrency markets anyway. But after that, when we got down to the daily pivot, prices rebounded all the way back up to R2. Again, not a real stretch. And then we ended up closing just above R1. And I do have an intraday chart to show you. We were up 0.56% on below average volume. And the technicals, they are improving a little bit. We had up days for Monday and Tuesday, so that's flowing through to some of our charts. It's kind of hard to get real confident in that right now. I think a lot of it had to do just with the distraction of the midterm election. And now that that's sorting itself out, we'll see what the market is able to do going forward. We're still really fixated on inflation and interest rates. Of course, the whole list of geopolitical concerns. We want to keep an eye on the Iran-Saudi Arabia situation, as well as the Russia-Ukraine situation. We'll see if we get any Fed speak or anything in that area, but there's just an awful lot of headwinds right now. So here is Monday and Tuesday, where we had pretty much a flat open on Monday, and we were just going sideways, and then we drifted up a little bit higher for a positive close. We also had a pretty much flat open in Tuesday's market, and because Monday was not very wide in its high-low spread, that made R1 and R2 not very far away, so we were able to get above R2. Looked like we were going to kind of hold out here for a while, but then this is when some problems started to come into the market took us all the way down to the daily pivot, a little bit below that, before bouncing back up to R2 and closing just above R1. So what are some comments that we can make? And I have some additional charts to show you since I'm not doing a full-length video. The markets like that there will likely be a legislative gridlock environment. They kind of like that. Not so much because they want things to change, because they want to just have them stay the same, or they're already dealing with what's already happened. So this should limit the tax hike, stimulus plans, and any new regulations or changes in regulations, because it's a lot harder to get things done where there's a split in Congress. And the stock market typically performs well after the midterm elections. Now, that's looking out 12 months. That doesn't mean that right now we're going to shoot and go to the moon. It just means that going forward from here is typically positive. Not always. There's a lot of headwinds that sometimes the markets don't have that we're dealing with now. Stocks fell with cryptocurrencies because there's some liquidity concerns throughout the cryptocurrency market, as well as the margin call concerns that I briefly mentioned, and that took prices down. The dollar and interest rates, they declined, and once we hit the daily pivot, that gave support for buyers to come back in and push prices back up. And another thing that I'll show you a chart of, the equity put call ratio, it's really spiking. People are really loading up on puts right now. And the VIX, which had been oversold, has bounced back up because the VIX actually declined a little bit. So it went up a little bit. So it's no longer oversold. And we still have the same yield curves are inverted. The 10-year to the 5, the 10-year to the 2, the 10-year to the 3-month, the 30 to the 5. Those are all the yield curves that I follow, and they remain inverted. Sentiment is still ever so slightly over into the positive side. And then the Dow still has the best looking chart when we do all the rankings of all the different charts. And it's actually been able to regain its 200-day moving average, where the NASDAQ 100, that's the worst. It's in last place. And even though it was up slightly and showing a little bit of improvement, it still has a lot further to go. As far as economic reports that came out, we've been really limited during this week so far. The NFIB Small Business Optimism Index, it came in down a little bit. Last time it was at 92.1. This time it came in at 91.3. And our trend, this also has changed too. We're neutral. We're below 20 with the ADX. And we're with the last two up days, the green line has just barely gone above the red line. So we're barely positive right now. Because we've had two up days, and please be reminded that one down day can wipe out all the positive things we're seeing right now. But the bias, I've switched over to positive, and the momentum, I've kept it mixed because it's below average volume. And yeah, we're showing some improvement, but it's not really solid right now. We need some more upward price action to give us some more positive signals. And like I said, one kind of significant down day could wipe out any of the positive side that we're seeing right now. There's another thing I wanted to show you, that the anchored moving average going back to the COVID low in March of 2020, that is right now acting as overhead resistance. And that is at about 38.56, 38.57. So that gives you some kind of an idea. We're at 38.28 right now, but that did act as resistance in Tuesday's session. Another chart, this is the spike of the equity put call ratio. We were working off of this spike right in here, and look at how we've really gone up. This could be positive longer term. Once it finally settles down and starts to go back down, that could be a spike that gives some support to the S&P 500. Then here's our daily chart showing how we were able to regain the 50-period moving average. So that's positive, but we still need to see some more follow through. We're not very far above this pivot level, which may act as support if we come down. But if we break through that, it could turn things a lot more negative. And anytime we drop below the 50-period moving average, that would be negative too. So we need to stay above that. And that's currently at 37.96 or so. So what's our outlook then for Wednesday? The technicals, based on Monday's and Tuesday's advances, they're turning more positive. We do have the weekly MBA mortgage index that comes out. Well, that's why they call it weekly. Wholesale inventory. So not any real big things coming out economically. The whole list of geopolitical events, maybe some more fallout from the election if there were some surprises in some areas, things that people didn't expect. And then what are our scenarios? Where I'm not going with the down scenario or the up scenario currently because our ADX is below 20. And we're barely positive even with that. So I'm going more with the sideways right now. We need to see more up or down action before we get back into a more defined trend. So our conclusion, the S&P, it's turning more positive, but again, with a big caveat. A down day could wipe that out. An up day could really reinforce that. In short term, we are turning more positive, but we still have the McClellan oscillator. It's extreme positive. All of our other short-term indicators, they're not extreme currently, but this could still go higher. The McClellan oscillator could still go higher. It doesn't mean that it has to stop right here. It's just a warning sign that we look at. Intermediate term does look to be improving if we continue to go up, but long term, we are still negative overall. So thank you. Have a good day. And again, I'll do the videos as I'm able to, whether it's a full-length video or just a daily brief. But I'll do the best I can to try to give you my insight and analysis on things.